All right, people. Good afternoon and welcome to class. I know you can hear me, so I'll just quickly go ahead and go straight to the point. Okay. Today is Wednesday. Today's Tuesday, and we have so much to cover. Now, the reason why I'm doing this class is so that I can teach you one thing that I've back tested, and I know it works. And so, because of that, I want to teach you how it works and how you can make good use of it. All right. So if you are here, please let me know your name and where you are joining us from. If you are here, let me know your name and where you are joining us from. Your name and where you are joining us from. Let's have you. You find from Abuja, Desiree from Kaduna, Victor from Lagos, Noxy from your class. All right. So you might be wondering why we are doing this class on Zoom. Is so that I can just teach straight and teach fast and without disturbance. So I'll be in a hurry. This class should not last more than 10 minutes. Of course, we dropped the signal today in the Telegram channel. We had two positions: a sell, a small sell, and a big sell. Right now, we're expecting the market. Now the market has filled up the small sell, market will still come back again and fill up the big sell, and then we'll have this move all the way. All right. So let me bring it closer. So this is the small sell here. We had this small sell given here, and it was a rather good one. This is it here. This small sell. This was sorry, small buy. Sorry, the small buy here, giving it to this point, and it was a rather good one. This was where it was given. The free signal was given here. This was where it was given. The free signal was given here. So market was supposed to tap into his zone and then push up. The market has done that. As you can see, I drew something here. That is to say, that market will still come back to this point and hold, come back down for the sale, and then push up finally. Now that's one of the things I want to teach you today. How to know if a zone will hold. How do I know that your zone will hold? How am I sure that this zone will hold? Now I'll be very very fast. Okay, like I said, I'll be very very fast. So please and please and please and please and please follow me attentively. If you have questions, you can do well to ask. All right. So if you have a zone and you want to be sure whether it holds, all right, there are five confirmations that you should look out for. If you see any of these five confirmations, maybe you see three, or you see two, or you see four, then you are good. All right. Number one, you have to make sure that this is on 15 minutes time frame. All right. I use 15 minutes time frame. It has to be on 15 minutes time frame, and it's combined with a higher time frame market structure. That is to say that if the market structure is going up, all right, the 15 minutes time frame should agree with it, and they are going up. Now, eventually you have this other block on 15 minutes time frame. How do I know if this zone work? How do I know if this zone work? Number one, now please, from you want to have a higher time. You want to have a zone that sweeps structure. Get me? The other block that you are drawing, there, all right, must sweep structure. What do I mean? I mean that if this is your zone, all right, if this is your other block here, all right, the other block here must sweep structure. Right, this is the other block here. To the left, right, to the left here, there must be a kind of other blocks structure. Sorry, other block liquidity sweep. Other block liquidity sweep. Let me start again. Number one, if this is your other block here, all right. Now, the first thing you want to make sure that is that zone that you're doing at your other block, make sure that some kind of liquidity is being swept before the zone is created. This is what I mean. This is liquidity sweep here. Make sure that zone sweeps liquidity before it's being created. All right. So now this is your other block here. If you don't understand, say I don't understand. So go on. If you don't understand, say I don't understand. So go on. So this structure here must first of all sweep liquidity. That your other block must first of all sweep liquidity. A kind of liquidity must be swept. Why we say it must sweep liquidity is because if you do not see the liquidity, that means you are the liquidity. If you don't wait for liquidity to be swept, that means you will be the liquidity. So to make sure that you are in a safe zone, make sure that liquidity has already been swept at that place. So if you enter, market will not use you as the liquidity. Do you understand what I just said? Do you understand what I just said? So if you are entering a particular direction or a particular position, make sure that that zone that you are entering has already taken out liquidity, so that when you enter, you will not be the liquidity. That's number one. Number two, having made this first conversion, number two is that that other block here after sweeping liquidity must make sure that it sweeps a kind of, it breaks a kind of structure. That's number two. It breaks a kind of structure. Number one is that it sweeps liquidity. Number two is that it will break a kind of structure to the downside. Breaking of structure means that there is involvement of market makers, big boys in the market, smart money, big money. If a market breaks liquidity at any point, it shows that okay, at that point, because it broke liquidity, there is involvement of smart money, big money there, and so you can understand that for sure this place will still hold. This place will not be a very very big zone. All right. Number one is what? Number one, I say that that zone must have a kind of, any kind of liquidity sweep at all. That zone must sweep liquidity, and I do that here. That's taking out liquidity. Number two is that it must break structure to some point to go down. Number three, now please follow me. Number three is that that zone must have a kind of um LVG or imbalance, that move down. All right, the other block there must have a kind of LVG or imbalance. This means that the candles that form from this place must be big and strong. You don't want a zone that brought out small candles. No, it shows that there is less power in that zone. If your zone brings out big candles like this is what you want. It shows that from leaving this zone, market actually left with power. All right, it must have and left and created FVGs as it was leaving. That's number three. Number four again is that that other block, all right, your zone in the other block must be at a premium or discount zone. All right, of course you know premium and discount. You should know premium and discount. You have something like this. There's one like this, premium. So if you are selling, you must make sure that you are selling in the premium, and if you are buying, you must make sure that you are buying in the discount. And number five one, and last most important is that that zone that you want to buy from, or they want to sell from, in this case here, that you want to sell from, it must have a kind of inducement at that point. It must have a kind of inducement before the zone. It must have a kind of inducement before the zone. This makes for strong confirmation, because like I used to tell my students, if an inducement holds, if you see an inducement, the next zone after your inducement is your major zone. Any kind of inducement that you see, the next zone that comes after it is your valid zone. Inducements are there so that market will take out early sellers. So once you have your inducements here, once you have your inducements here like this, all right, once you have your inducement here like this, then people will start selling, thinking that's the main zone. Then what happens is the market will now go up, take all of them out, and then come into your zone, and then will have a push down into your major zone. Is this clear? Is this clear? Is this clear, please? Guys on YouTube, is this clear? Oh god. Guys on YouTube, are you with me? Guys on YouTube, are you with me, please? If you have me, say yes. Our YouTube guys, if you are with me, say yes, say yes, say yes, yes. I want to know whether I should move on or I should explain again. I should end the class. Beautiful. This is what I'm looking for. Okay, so let's take all those four confirmations into replay. All right, let's have this. Let's have this. Okay, let's have this. Let's have this. Now this is 30 minutes time frame. Let's go to 5 minutes time frame so you can see clearly. Now on this point here, number one, I say that what number one, that your zone must have any kind of sweep. All right, this is a sweep, this is a major sweep. All right, why is this sweep important? This sweep is important because once it sweeps, there is little, it reduces the chance of you being taken out based on liquidity. Once liquidity has been taken out, all right, there's only one liquidity. um Market cannot take a liquidity then take a liquidity again. Liquidity is taken out just once, and once liquidity is taken out, you want to look for that zone. In my last video, some of you remember this. I'm just making more explanation in like I make in my last video. How many of you watched my last video? You will see this that I'm showing you. How many of you watched my last video? You see this I'm showing you. Now I say that number one is what? The clear sweep of liquidity. As you can see, this is our sweep of liquidity. So you can bring it here and you can say that okay, our liquidity has been swept. This is our liquidity sign, and money has taken out, and boom, we are safe. That's the first one. Number two is what? Number two criteria is what? Someone please help me. Someone should please help me. Number two criteria is what? Number two criteria, please help me. Oh, causes a BOS to the downside. God bless you, Mr. Medike. A BOS to the downside. So you can see that after liquidity has been swept here. After liquidity has been swept here. All right, liquidity has been swept. Number two is what? BOS. BOS has been taken out. That's number two. BOS has been taken out. Now you might not necessarily see the 5 confirmation in one. You can see 3. You can see 2. All right. So if you just see 3 or 4, you are good. So after BOS is taken out, number 3 is what? Number 3 is what? It has to be in the premium or discount of a zone. It has to be in premium or discount of a zone. Is this in the premium or discount of a zone? Yes. If you look at this, let's bring out our Fibonacci extension. Our Fibonacci extension will tell you that from here to here, good. Here to here is in our what? Premium zone. So our sell there is valid. So this one has been met. Our premium and discount is already established. Our zone is in a premium zone, so our sell is valid. So let's go on. The next one is what? FVG. Is there an FVG in this place? No, in this place we will have an FVG, and that is totally fine. In this place, because sometimes it should not give you all the conventions, but at least it gave you how many? We've given us 1, 2, 3. Now the fifth one is that what? There is what? Sufficient liquidity. There's sufficient liquidity or what? Inducement. Okay, I didn't even put number 6. I didn't put number 6. Okay, I'll come back to that. So the next one is that there is inducement in that zone. If there's inducement in that zone, all right, inducement means that there should be a place that the market faked out early sellers. This is what I mean. A place where the market faked out early sellers. That's what I mean by inducement, and this is a good place. A place where the market faked out early sellers, all right, that they will think that they are trading support and resistance. So if the market comes into this place, they want to start selling. This is what? Inducement. And I told you that in the market, once you see inducement at any place, the very next place above it becomes your what? Your valid zone. So this becomes a valid zone. And where do we take our sell from? This is now our sell position. And then where do you aim? You target the next liquidity. You target what? The next liquidity. So this is giving us a move of over what? This is giving us a move of 1 to 9 RR. All right, that's giving us a move of 109 RR because this here is the next liquidity zone. That's the next liquidity zone. Now let's see how this plays out. Are you ready? Now you see how it will tap into the zone. Now you see how it will tap with it. You just see, just watch how it tap into the zone with clear accuracy. Just watch how it tap in the zone. So we play our trade and we wait until market taps into the zone. And once market taps into the zone, our sell is valid and we'll push down. Let me know if you have questions. Let them know who has questions, please. Let's follow this. Questions. So this is in inducements. Don't forget, this is the inducements. All right. So good. Excellent. I'm taking out. Excellent. Acting now. So this market will now go back. All right. Go back and touch our place. Boom. And you can see pinpoint accuracy, and our move is complete. As simple as that. You can see how it is simple. Explain the 5 concept again. I should explain the 5 concept again, or I should look for another chart. Which one should you do? I should explain 5 concept again, or I should look for another chart. Which one do you think is best for you? Look for another chart. Okay, let's for another chart. I'm seeing one. Okay, I'm seeing one here. This AUD card, but let me see whether I can explain this with Euro USD. Let me see whether I can explain this with Euro USD that I took just now. At least Euro USD that I took this morning that I sent to the signal channel. This Euro USD I sent to the signal channel. Okay, beautiful. This is a good one. But now permit me to invert this chart. That is, I should turn it upside down. I'll use this to set an example. All right. So number 1 criteria is what? Let's have the number 1 criteria again, please. Let's have the number 1 criteria again, please. Guys on TikTok, hi, good morning. You guys are not even contributing. What's happening? Number 1 is what? Any kind of liquidity sweep. So we can see that liquidity has been swept here. Amen. Do we agree? Liquidity has been swept here. Look at equal lows are taken out. Of course, you know type of liquidity now. Equal low liquidity, equal high liquidity, trendline liquidity. You know all those things I've taught you. That is number 1. That's number 1 criteria. Number 2, after the equal low is taken out. Number 2 is what? After the liquidity is swept, a kind of BOS. And then from here we can see that our BOS is formed here. You can see our BOS is formed there. This is the move that caused the sweep. And the market has broken here, making that our BOS or market structure shift. Or BOS, anyone you want to call it. Step 3 is what? Step 3 is what, please? Step 3 is what? Step 3 is it creates imbalance. Step 3 is what? It creates imbalance. So if you look at this, you see that market has created imbalance, like massive pushes to that outside. You can see your FVG here. You can see your FVG here, right? You can see your FVG there. You can see the imbalance. Imbalance means that inefficient distribution of the market. Imbalance means what? Inefficient distribution of the market. So you can see that market distributed inefficiently. All right, that's number three. Number four is what? I forgot to add this one. Number four, there must be, okay, that's number six. So number four is what? Inducement below or above the zone. All right, now from that place, right, if you go to lower time frame, you see this inducement here. That inducement there will want to, what is the cause of this inducement? This inducement there, right, it will make for people to want to sell, it will make for people to want to sell this place early. All right, yes, we also have premium and discounts. Good. That inducement there will make for what? That inducement there will make for people to want to sell that place early. And then yes, you have your premium and discount. You already know that this place is in a, this place is in what? Is in a premium zone, so our sale is valid. It's in the premium zone here. Our zone here, so our sale is valid there. This is our sale zone, so our sale is valid. The next one is what? You can say this is your inducement. All right, and you can even say this is your inducement. Anyone you want to choose, but I won't count that as inducement because it's already in the zone. Just like this one tapped into the zone well, and after that, what do we have? Market just have to come back into the zone here, and then we have our push down. So as you can see, market just came back into the zone, and then we have our push down. One more example, or I don't forgive. One more example, or you understand? Should we take one more example, or you understand? Should we take one more example, or you understand? Okay, they say one more example. So let's see. Let's see one more example. All right, one more example. One more example. One more example. One more example. One more. One more. One more. In fact, look at this. See again. Again. Look at it. Look at it again. Look at it again. This E here, we cause this. Should I use EU or gold? See is EU. We call this EU. It is doing the exact same thing. Let me show you again. Criteria number one is given. Have you seen it? Other criteria number one is given, that is sweep of liquidity. Number two is what? Take out or BOS. This is the move that causes the sweep of liquidity. That's taking out. That's criteria number two. No, number three is what? Is already premium zone. Criteria number four is what? Inducement. Criteria number four is what? Inducement. So again, criteria number one is what? Sweep of liquidity. Guys, are you seeing this? Do you understand? Criteria number one again is sweep of liquidity. Criteria number two, the BOS. Criteria number three, inducement. Criteria number four is in the premium. Criteria number five, you just have to sweep into, you just have to come into the zone, and you can see the massive sell off, and boom. Trust me, market can be that easy. Market can be that easy. Market can, I tell you, market can be that easy. All right, forex trading can be that easy if you know what you are doing. Forex trading can be, I bet you, forex trading can be that easy. Ladies and gentlemen, thank you for joining class today. I really appreciate you for spending time. The Lord bless you. Thank you once again. Right now, I'm in massive profits on this pair. Uh, so thank you. Please, if you have something that you want me to teach, if you have a concept you want me to teach, just comment it in the YouTube section, in the comment section. If you want a concept for me to teach and perhaps make videos on, you can drop it now. And next time that we are teaching, I'll teach those concepts. And also on YouTube, if you are not joining our group on Telegram, click on the link on my bio to join the group on Telegram. And if you want to reach me, my details are there. Make sure you're on group on Telegram, guys. Make sure you're on group on Telegram. The link is on my bio. If you don't know how to reach me, just comment on any of the videos. I'll see it. All right. Thank you once again, and have a wonderful day ahead. Great FX out.